Arvocap Almasi fixed income accumulation fund, one of the most sought after investments, and I get it, a 24% return. Those are pretty good returns, right? I mean, with 100,000 Kenya shillings, you got 24,000 in 11 months, all passive income, or rather money working for you. Scale that up to 1 million and you're looking at 240,000 Kenya shillings in just 11 months. Amazing, right? Let us review this fund and find out how they make their money, or how they make you money. So first things first, is it regulated? Check. That is confirmed that it is regulated by Capital Market Authority, and the fund manager for this fund is Arvocap Asset Manager. The fund manager were licensed in 2023 and they launched this fund in 2024. So this Almasi fixed income fund, accumulation fund, was launched in 2024, meaning it's still a new fund, but I mean, they're giving good returns, so it's always a nice thing to assess them to see whether it's an investment that we should go for, okay? This fund is a collective investment scheme, meaning that they collect money from different investors and they invest on their behalf. And in return, you get some profits, okay? Or you earn some interest. And to be specific, this is a fixed income fund. Basically, they invest in bonds, but we are going to go into that in details later as we are discussing about the asset allocation. But for the meantime, I want us to go through how they have performed over time since they launched this particular fund. And in 11 months, that was now in December 2024, I'm going to share a fund fact sheet for December 2024, and I'm going to share another one for April 2024, okay? So for the 11 months, they did a return of 24.69%. I'm going to attach here how they have done since inception until April 2025 so that you can see how they have performed over this period of time, okay? Now that you know how this fund has been performing, I would like to explain a term that I came across in this fund fact sheet. And this is a common term in financial world, but most of the funds that we have discussed before, they had not introduced this term. So if you have gone through the fund fact sheet of this fund, you have come across this term called NAV, or net asset value. And here in this screenshot, it is indicated 1.2469, and this basically means that this is the value of your units. This value changes over time, which means it affects how much you will receive when you're liquidating your asset or when you're selling your units. But I would also like to mention that though the fluctuation is not too much, but someone dealing with a large amount of money, you might feel the difference when the NAV changes, okay? And the NAV is basically the value of the assets invested. The NAV can be affected by different things, especially now that these funds do what we call active bond trading. It means that they are trading, or they are buying and selling bonds in the secondary market. This means that when they are doing active bond trading, the changes in prices of the bond sometimes will affect the value of the assets, okay? So that also affects the NAV, or the asset that you have invested in. So that is what makes this value change. And I'm going to give you an example. Here I have a screenshot of the fund fact sheet in December 2024, and the screenshot of the fund in April 2025. And you can see in December, the value of the NAV was 1.1634, and the NAV in April 2025 was 1.2462. You can see the difference is not much, but if you're dealing with a lot of money, even that 0.1 is sometimes much. So you need to consider that when you're going in, okay? But it doesn't fluctuate much. And remember, it can go up and it can go down. So sometimes it can work to your benefit, sometimes it can work against you, if depending on how the markets are doing, all right? So make sure that you take note of that even when we are talking about the interest. And remember, this is not the interest that you have earned. So on top of maybe 24.69% that you have gotten from the fund, in addition, when you're exiting, then if the fund the NAV has changed or has gone higher, then it means you're also going to gain something on top of that. If it has gone low, you'll be selling at a lower price, okay? But it is not much, all right? So our next question is, how do they make money? Where do they invest to get such good returns, even when other fixed income funds are giving rates close to those of money market funds, which are very low? Yes, thing that I'm going to mention that we have just covered is the active bond trading, meaning they buy and sell bonds frequently rather than holding them until they mature. This way, they are able to maximize on the returns by taking advantage of price movement, interest rate changes, and market insufficiencies, meaning that they can actually do arbitrage trading. Yes. Now, active bond trading comes with its own risk, meaning that it goes back to how good the team is to make right decisions on when to buy and when to sell, and then also how they are able to mitigate risk through diversification, okay, or investing in different bonds or different corporate papers or different corporate bonds. Now, in addition to active bond trading, this fund also invests in other things, and I'm going to put this screenshot here. I got this directly from their fund fact sheet, and I'm going to read. So it says, the Arvocap Almasi Fixed Income Accumulation Fund invests without limits in government bonds and treasury bills issued by the government of Kenya. The fund also invests in qualifying fixed income products such as commercial papers and corporate bonds. The fund is actively managed with an aim of achieving higher returns above the benchmark market yields. The fund benchmark is the Kenya government listed bond 5-year yield. And so that is how they invest your money when you invest with them. And I decided to get a fixed income fund fact sheet from another company to just compare what they invest in to get the difference, because this fund has a lot of difference from other fixed income funds. So I wanted to just for us to see what makes it different from other fixed income funds, okay? So this is for Etica fixed income fund, and this is what Etica invests in. So you can see, in addition to this, Almasi fund also invests in corporate bonds. Then I want us now to focus on the benchmark. The benchmark for Almasi fixed income fund is 5 years bond, while for Etica it is 182-day T-bill. Yes, and if you're familiar with government securities, you know a 5-year bond has a higher interest rate than a 182-day T-bill. Yes. And in addition to this, I hope you can also notice that for Almasi funds, they do active bond trading where they're investing in secondary markets. But for Etica, they have not mentioned that they do that. So this, I think, is the reason why they are able to actually give you better returns than the normal fixed income funds, okay? But I also want you to understand, now that we have introduced active trading in this fund, we have also the returns are also higher than what most fixed income funds give. You also have to agree, or you have to accept that even the risk for this investment is also higher than what other fixed income funds give, okay? So we go to our next question. Now, because the returns are very good, does this fund guarantee capital preservation? And I know that we have mentioned this before in our previous videos when we were speaking about special funds. We mentioned, or we talked about, aiming to preserve capital as opposed to guaranteed capital preservation. So special funds too. Also, Arvocap Almasi Fixed Income Fund also aims to preserve capital, but it does not guarantee absolute capital protection, okay? However, unlike special funds, the underlying assets for Arvocap Almasi Fixed Income Fund are low-risk investments. Since the fund invests in government bonds, treasury bills, and corporate fixed income products, it means that these assets, or the underlying assets, are not as risky as those in special funds, okay? So this fund is designed to be a low-risk investment to just provide steady returns. However, there are still factors that can affect the value of your investment, such as interest rate fluctuations, bond price movement, credit risk, meaning defaults either by the government or in corporate bonds or commercial papers, okay? And now, what is the risk profile of this fund? This fund is rated at 3, meaning that it is a medium risk investment, and the risk associated by this fund include interest rate risk, meaning that the interest that you are getting is not fixed and it changes from time to time. So you're not going to be getting the 24 every year, okay? The other risk is income derived from the underlying asset may fall when there is late payment or defaults from the issuer. Meaning that if the government defaults, then you're going to be losing your capital, or some of the money that you have invested may be subject to losses. And then also, because they also invest in corporate bonds and commercial papers, if these companies default to pay the loan or the debt, it means that you as an investor, you're going to feel some losses. But again, these are very rare occasions, because I'm very sure, because these are professionals, they have measures in place to make sure that the defaulters, they're not defaulting. Yes, but I mean, this is not impossible. We have seen big companies going down, and if at all these companies are part of their portfolio, it means that they would lose some money. But again, it goes back to these are rare occasions, okay? And the final risk that I'm going to be discussing, it's sometimes it may be very difficult for such a fund to liquidate and redeem its underlying asset in a short notice or during maybe extreme market conditions without suffering a loss. So in cases when maybe every investor is going to get their fund from this particular investment, it would mean that it would be very hard for you to liquidate your assets at that particular time. So generally, this fund is a liquid fund when only a few people are going or accessing their money at any given time. But in cases of maybe a bank run, it would mean that in such scenarios, you would not be able to access your money at that particular time, because they are not structured for liquidity per se. It's liquid when a few people are going to get their money, but if a lot of people are coming in to get their money, then it would mean that you might suffer some losses again. These are rare occasions, okay? And this is the reason why I always encourage you to make sure that you're diversifying your investment, because all investments have some level of risk, right? And the only thing that you can do at a personal level is to mitigate the risk and take calculated risks. And this you can do through diversification. Make sure that you're not investing more than you can afford to lose in a single investment, okay? I hope you are together in that, and we are actually implementing this, because this is very important, all right? So far so good. And before we go to our next item that we are going to be discussing here today, I want to ask a favor from you. If you like what I do here, the only simple and free way to support me is to like and also subscribe to this channel. And my commitment to you is I'll continue looking for investment opportunities for you, update you on investment space, and provide investment tips that will help you mitigate the risk and also maximize your returns. Thank you so much for the support. And now we go to our next thing. I would like us to cover the features of this particular fund, and for this I'm going to attach this screenshot here so that you can follow what I'm looking at, okay? Now from this, we have already talked about the fund inception. This fund is Kenyan. The currency is Kenya shillings. We have also talked about the net asset value, that is NAV. The asset under management is 1.695 billion. The minimum investment is 100,000 Kenya shillings. The minimum top-up is 100,000 Kenya shillings. The frequency for top-ups, you can do regular top-ups. The annual management fee is 1%, okay? And the returns that I have indicated, or what they usually share in the fund fact sheet, is already deducted the management fee. So you won't feel that much, okay? The initial fee is 0.5% that is charged on the asset that you are investing. For example, if you invest 100,000 Kenya shillings, you're going to be charged an initial fee of 0.5% of now the 100,000 Kenya shillings, all right? And then they have a 20% performance fee, which is charged above the handle rate. And the handle rate is yield to maturity of the Kenyan government bond 5-year bond plus 200 BPS. YTM means yield to maturity, and it is basically the effective rates, which assumes even the coupons are reinvested for compounding. So they benchmark their returns on the effective rates of 5-year bond plus 2%. That is what it means. So if they get a rate that is above the 5-year bond plus 2%, they are going to charge 20% on that. All right. So the custodian is NCBA Bank, and I think there are two things that are missing from these features, and that is the compounding as well as the lock-in period. But before we look at that, I want to hear your thoughts. In a scale of 1 to 5, how likely are you to consider this investment? 1 being very unlikely, 3 is you're not sure and you would like us to assess the fund further so that you can make that decision. 5 is very likely and you'll actually consider it because you understand the fund. This will help me to evaluate the effectiveness of my content and how I can improve it, okay? And guys, I really appreciate your feedback, because from my previous video I had asked how long you'd like our videos to be. You said 15 minutes, so nowadays I'm very keen on it to make sure that the videos are 15 minutes and below. Yes, so thank you so much for the feedback, and I will work on this next, okay? That being said, let us now look at the frequency of compounding as well as the lock-in period. So the frequency of compounding is annually, and it has a lock-in period of 6 months. If you need a one-on-one session, here is my contact. And if you have not watched this video where I compared Monster X with Oak Special Fund, make sure that you do. Thank you so much for watching, and happy investing. See you in our next video. Bye.